And we are live. Just making sure. Okay. We're live. Welcome to Weekly Roundup with Ben and Scott.
Hello.
Ben. Nope, that's Ben. This is Scott. It is April 12th, 2024. I'm all frazzled because it's a 3 p.m. start today. I think this might be something new we should start, though. What do you think? I like the 3 p.m.
Yeah, I think it's a good idea.
Yeah. That way we can get the video out for the weekend too, right? So I think because it takes a while to render.
Yep.
So 3 p.m. Let's get sharp here. Let's sharpen the tacks, sharpen the pencils. Anything else that needs to be sharpened? Okay.
That's it.
What feels like it was a busy week for us. I don't know, what was the market? Was the market busy?
Well, Bank of Canada this week, so it was quite a bit of action the last 2-3 days around that and around gold. Gold's been on a tear, so we're going to talk about that today. So lot to discuss that way. Yeah, I think a lot to discuss, certainly. But what I did this week was I went back and looked at April of last year and said, what did we talk about April last year? So I thought that was a pretty good look. See what we did, see what we talked about. And one of the things we talked about, I was planning to talk about today as well, which was about GICs versus bonds at a discount, because we had that conversation this week with a few people that were interested to learn about it a bit more.
Yeah, we certainly did. Yeah, it's good.
Yep.
Okay, should we segue that into actually talking about it? Or are you just gonna
Sure.
preview the topics for the rest of the time?
Yeah, sure. I have a couple slides that we can go through. One of them is
okay. I see what's happening.
directly related to that, but
I see.
maybe we can hit on a few things. You see anything in the news this week? Interesting.
We're off kilter today, you and I. Yeah, BlackRock all-time high. I mentioned it to you this morning. What their AUM hit $10.5 trillion. Trillion with a T.
It's a big number.
It's one thing if you exceed 1 trillion.
Yes.
But 10.5 trillion.
Yes.
That's a lot.
That is a lot.
Yeah.
That's a lot. That's why they control the narrative. That's why they got Bitcoin approved. That's why they get whatever they want approved. And yeah, they're the leaders. Larry Fink certainly pulls the strings. Who is the CEO of BlackRock?
Yeah, you got to start thinking yourself with that kind of money. There's probably nothing they can't get done if they wanted to, right?
They control so much flow, so yeah, without a doubt. So yeah, in the daily there, I teased about Neil Howe, kind of talking about passive investing versus active investing, and so that kind of dovetails with what you're saying, just around how much attention and time that the ETF providers get, and BlackRock's the top of the heap right now.
Yeah, for sure.
Yeah.
So you asked what I noticed. That's what I noticed. But what did you notice, Ben?
Yeah, that was big. That was big. Today we saw gold. It looks like peak, at least short term. So we've seen stocks kind of roll over and gold roll over. Gold hit like 2440, something like that, and it's peeled back here. The other thing that we've seen at 2350, so down almost $90 off its high, was the US dollar. So US dollar has been ripping. So against kind of most currencies, but certainly related to the dollar, we're at almost 138 today on the dollar. I do remember a couple of these calls the last 6 weeks we've been talking about. I said, I think the US dollar can probably go up against Canada. And then we saw kind of conflicting economic data where Canada is slowing, where US continues to be accelerating. We had that portfolio manager that we spoke with this week, and he talked about that, kind of the differential between Canada and the US, and that looks like it's going to continue. US dollar's gone up versus Canadian dollar, while oil's been going up at the same time as well. So certainly a signal to pay attention to and see what happens from here. But US dollar's been on a tear.
Gotcha.
Yep.
All right. What do we What do we have for slides? Obviously, you have some GIC versus bond slides. You know about already.
Yeah.
Don't keep them from us any longer. Reveal them to the audience.
I will. What is happening here? Getting a warning as I try to present in Teams, but it doesn't seem to want to let me. All right, let's try this then. All the functionality is a bit different depending on the format we're using with our Teams, right? So just let me know if you can see it.
That looks amazing. Looks great.
Okay, great, excellent. So yeah, the big news was, at least in Canada perspective, is Bank of Canada did nothing, excuse me, did nothing as anticipated on Wednesday, but as we always do and our economics team always does, is they parse and go through what did they say, how did they say it, what are they leaning towards, and they always do a quick snapshot, which I thought this is a good way to look at it, is they kind of point to the high points of comments around, has anything really changed? And this was March versus April. And really, I think the thing that changed is they said they think core inflation continues to come in balance and that wage growth is decelerating. And in Macklin's press conference as well, he effectively said everything's heading in the right direction. And we anticipate that we'll start discussing cuts. Obviously, nothing's a certainty between now and then, but May of last year, the month-over-month increase in CPI was around 0.4%, which is super high. So we'd expect it to come in quite a bit lower still. So we expect the April and May data to be softer. And so unless something material happens, I'd expect we see that cut in June. So so that is worthwhile looking at there. What they also update as usual is just their forecasts on growth and inflation. You can take them for what they're worth, but certainly that's what they use, and this is their gauge. And so you see a bit of a revision to CPI, which coming into the month they were at 3.2 expectation, and we came in at 2.8. So that is quite material when you're talking as a percentage of it. So that's a big adjustment. And when we look at inflation, kind of their long-term views, that inflation is going to be lighter than expected this year, kind of in line with your view, and then 2026, which is, in my view, way too far off. It's just a pure guess at this point, but that's what they're expecting. Same with growth expectations. Looking at growth expectations coming in a little bit better than expected. So we'll see what that's going to be, but we think Q1 is going to be a negative print in Canada, but all that's already priced into the markets. So from gold perspective, so I've mentioned gold's been on a tear. Lots of conversations with clients about gold and miners and so on and so forth. Listened to a couple of presentations this week. Hedgeye had their annual virtual presentation where they had a bunch of speakers on. One of them was a Goldman Sachs commodities trader yesterday. He was talking about who's buying all the gold. And effectively, the answer is they don't really know, because most of those gold purchases are happening through Dubai, which is a much more difficult market than New York and London in order to track who's buying the stuff. But if you look at effectively where the gold sits, is China has been a huge buyer of gold. I would expect you would see the same with India, Russia, Turkey. These countries continue to buy gold as well as a store of value. So this will certainly be interesting to watch and see what they do from this perspective. So gold, as you see, continues to march upward from a holding perspective. So as we look at and put up every once in a while, we look at or at least put out these reports just around GMI. So that's a global macro investor. That's Raoul and Julian, just talking about their forecasting around where they think certain things are going. This is CapEx intentions. So this is, I think, a great way to think about spending in corporations and what they're going to do. So we're seeing CapEx intentions starting to kick up, and GMI actually has this going up for the remainder of the year, which is quite positive. And so it'll be interesting to see how this plays out. A little bit of a correction in the market the last couple of days, but I think we're starting to see some optimism around what this looks like as well. PPI looked quite good as well this week, so I thought this was a great view on that. And this was about GICs versus portfolios, and I rarely talk product, if at all, on these roundups, but CIBC's come out with an interesting strategy, and they're effectively investments that work for non-registered portfolios, investment account, margin accounts. And so, as many of you know, just around the taxation, if you're in the top tax bracket, you pay effectively 53% on every dollar, is what you'd pay on anything you earn interest wise. So if you earn $5, $2.50 goes to tax roughly. But if you buy a bond at a discount, for example, that same $5 that you earn, you'd get to keep more, something in the neighborhood of like 65-70% of that money by buying something that's at a discount and maturing at face value. So in this example here that we see, so the 2025 one, investment strategy effectively gives you the same interest equivalent. If we look at the bottom line here, 6.83% is what you would earn interest equivalent versus the GIC that's paying around 5% right now. And these are kind of real-time numbers as well, just to give you a sense. So interesting, innovative product, allows you to buy bonds at a discount, mature at face value, and get a capital gain, and it's much more tax efficient. So we've been starting to put this to work in clients' portfolios, but I thought certainly worthwhile of having a reminder just around how it works, how it works. If you have money sitting around, if you're earning 4.5% in your high savings accounts, you can put something in place. If you can lock up the money for 1 year, and you can get a pickup of around 2% by investing this way. So just want to put out there, just a reminder that there are some interesting opportunities that interest rates have moved significantly from where they were 2 years ago.
That's it?
Yep, that's it on those
Good on
charts.
slides, eh? I like it. These early start times give you less time to get more slides together. So we slides right into the 3-slide rule. It's good.
That's it. Circumvent.
Exactly. So, sounds good. What are we looking to next week?
So we're still in the midst of tax season, as you know. So we've been putting out, Eva's put out a lot of tax documents. We've been back and forth with yourselves and your accountants. So if there is more that you need, some of the later slips like the T5013s and so on and so forth have been coming out now-ish. If you do have online access, there are all the tax documents that we have, with the exception of foreign property and gain loss reports, are on the portal. Obviously, we're happy to help. You need something, let us know. We'll send it to you. But certainly, I think almost all the tax documentation that you need that would go to CRA would be up on our site now, if you have access to the online. So I'd say that's a good spot to look for it. But you need something, you call us.
Definitely. Personal taxes due April 30th, I believe, CRA.
Yep.
All right. Anything else?
I'd say just from a next week perspective, we'll certainly be watching to see how and if this follows through. As I look here now, Dow's down almost 600 points, so we're having a bit of a correction into the end of the week here. Most assets are starting to turn down, and bonds are picking up a little bit. So just be watching to see how this plays out after a good first quarter. And I've been putting my buying list together, been chipping away at some things when they correct, and so I'd anticipate I continue to do that with what the market gives us.
Amazing.
Yep.
All right. Good show. Good stuff. Yeah, like you said, if anybody has any questions, give us a call. Other than that, we will see everybody next week.
Sounds good. Take care.